Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Oh, good day, everybody. It's actually not Phil Tarrant today. It's Tim Neary. I'm editor of sister publication of Smart Property Investment Real Estate Business, and we'll be hosting the show today in place of regular host Phil Tarrant, who is away and can't be here today. That said, joining me on the show today is Benjamin Plohl. He's a property investor with an enviable track record, let it be said. Started at the age of 18 and been in the business now for 15 years. Hello, Ben, and welcome to the show.
G'day, Tim. Good to be here.
Fantastic. So 5 properties in the portfolio. Started when you were 18. Let's go right back to the beginning. What attracted you to property investment and how did you get started?
Yeah, I guess as a young guy, I always enjoyed going through the real estate agent magazines and the shop windows. And yeah, it was always something that I was keen on. So at age 18, my brother and I, we decided to take the plunge and buy an investment property, a two-bedder in the inner west of Sydney, which it was a great property, I guess, to get started.
And what did it look like? What did you buy?
It was a 211 in the suburb of Drummoyne. It was $330,000, so a fairly good price back then. If only I'd kept it, it would have been a great buy.
Yeah, and let's talk about that as you go on. So you've got 5 in the portfolio now.
Yes.
And you bought and sold a couple along the way.
Correct, yes.
Yeah. So when you started out at 18, did you have in mind that was going to be an investment portfolio, the start of an investment portfolio that you were going to buy and sell along the way? Or was that a purchase that you made to stay in, to go into as you got older?
Yeah, look, absolutely not. I had no idea what we were doing. It was a bit of an off-the-whim purchase. Both my brother and I got a finance background, so we knew it was a good buy, and it's always good to get into bricks and mortar. But look, no, I had no idea, didn't have a plan to build a portfolio at that stage, but knew it was the right thing to do.
So when you say that you knew it was a good buy, what stood out for you?
Location-wise, fantastic. You can't beat that part of Sydney. Close to the water, small walk-up block of, I think, 6 units in that block. So from an investment property perspective, it was ticked all the boxes.
So, I mean, you know that now at age 33 and you've been in the business 15 years, but at age 18, did you know that then? Did you recognize?
No clue. No idea. Yeah. But
So at 18, what attracted you to it then? What was the thing that stood out for you?
Location, right? So we did take the benefit of the first home buyers grant at the time. We did live in it for 6 months and before we moved back with mum and dad. But it was location. We were both working in the city at the time, so it was pretty funky jumping on a ferry and getting to work that way, which was pretty cool. But that was probably the main drivers of why we picked that area.
Fantastic. And then obviously the bug bit and you saw that there was an opportunity here.
Yeah.
And then where did you go from there? What is the next move?
It was probably a few years later. We decided to sell that property, and I used that money to build a property in the western suburbs of Sydney. So I built a house and lived in that for a short period of time, and then rented that out as well.
Okay, cool. And that one that you sold, what did you sell for?
The
first one,
we sold that for $450,000.
Okay, so you did pretty well out of that.
We did, over a couple of years. But
what do you reckon it's worth now?
$850 easy.
Yeah. So and then you bought, and then you stayed there, and then that became your second investment property. Did you move out? Did you move back into your folks' place? Or did
Correct.
You go
Yes. Yeah. So I built that second house, lived in it for a short period of time, and then met my now wife, and then we moved over to the UK. Lived in London for a couple of years. Not really thinking about growing a portfolio at that stage, but I kept that.
Did you keep that one?
I kept that house that we built. Then sort of went off and had a couple of years of fun in London.
Fantastic. That one that you built, what did that cost you to build?
That was $430,
including the land.
Correct. Yes.
Yep. And you said you still got that one, or you said it when you went to London, you still kept it. Have
Correct.
You still got it today?
No.
Okay. No. So you sold that one as well.
I did.
Did that one sell well as well?
Yes. So we sold that one for $600.
Oh, yeah.
So that was it was only a few years. It was sort of riding that Sydney growth phase,
in the rising market.
Yeah.
Okay.
So we lived in London for a couple of years. Lived and worked. We then came back, decided to sell that property to then now buy our family home that we live in now.
Okay. So when selling that property, the one that you built, the second one, that would have given you that would raise some capital for you.
100%.
Then you bought it, and then you bought your your primary place of residence.
Correct.
So at that stage, you've got one property, but that investment portfolio of 5, that was still to come.
Still to come, yeah.
How old were you when that happened, when you moved into that house?
We would have been 28.
28. So 10 years after starting. So that's when your current portfolio started to take shape.
Yes.
And then how did that take shape? What was your thinking around that?
Lived in London for a couple of years, came back, bought the family home in the Ponds, which is the northwest of Sydney. Great place to, I guess, raise a family, which we are. We went overseas again for a holiday, and then we came back and we thought we need to do something. I guess I always had that finance background and relatively good numbers, and I thought, well, we're still relatively young. We need to start. So a whole lot of research into property, watching podcasts like this one, and reading books, and an important part was getting help. So we come across a buyer's agent, and we met with him, and I guess put together a bit of a plan, and I think we've done well on executing that.
That's a great story. I mean, we talk a lot about buyer's agents and getting help on the Aspire show. And a lot of people get to the buyer's agent and get to the help that they eventually swear by a lot of the time, but later on in their portfolio. It sounds like you got in quite early, and that sounds like a good place to be. So you met with the buyer's agent and you said to him, I've got this idea. This is what I want to achieve in the portfolio. What advice did that buyer's agent give you starting out, and how's that played out for you going forward?
Yeah, so I guess it was some good advice around, starting small. Even though we had a bit of a track record in investing, it was still important, I thought, and he thought as well, that let's start and get a nice affordable property that had a really good cash flow, all those strong metrics. So we took the plunge and bought up in the southeast of Queensland, in Brisbane. And to date, that's been a decent performer for us.
And what was the driver back then? Was it capital growth, or was it rental yield that you were looking for? Was you looking to balance the portfolio? What kind of plan did you have? Given your finance background, I would imagine that would have been one of the things that you would have been interested in checking out.
Yeah, 100%. I guess relatively young, we both wanted capital growth, and then it wasn't sort of later on into the portfolio that we started looking at sort of cash flow assets just to balance out everything. And obviously the aim is to hold everything we buy and to continue to build. So obviously balancing it up from time to time is important. And we've taken that on board. And
another important consideration there, I guess, starting out with the end in mind, in terms of what you're looking for and how long you're going to keep the portfolio and what you wanted to achieve for you as you go forward. That would have been one of the conversations you had with the buyer's agent up front as well, I'm assuming.
Yeah, without a doubt.
Yeah.
So I guess both my wife and I are investing for the future, right? It's not something that will yield results in a couple of years' time. It's a long-term play for us, and it's about getting some options later on down the track.
Okay, cool.
I think if we continue on at the way we're going, 10 to 15 years' time, we'll have a nice sort of asset base that will give us some options around. Do we need to work? Do we need to? Does my wife need to work? Can we sort of change things up to ultimately give us a bit of time back? And like I said, we've got a young family. We love traveling. We try to go away at least every year, and London and Europe is the place that we love to spend time in, and we try to do that. But that's the aim around the property portfolio. It's to give us some choices later on down in life.
Fantastic, and it sounds like that's exactly what you're doing, living your life on purpose, which is a great place and a great way to live it. Let's explore a little bit, if you don't mind, what that looks like, that balanced portfolio, that living that life, that putting that investment portfolio to work for you, for your future, and how you want it to look like as you go forward. How does it look like today, and how's it balanced?
Sure. So I guess if we take back the family home that we bought, which was in the Ponds, it was one of those things. We came back to Australia from London sort of at the peak of the market. So we paid quite a bit. We paid $920,000 for our family home. It was one of those things you need to live somewhere. So It was just something that we sort of accepted. But sitting here today, it's still performed quite well. And we've got some growth out of that, which we have used to grow the portfolio.
Yeah. And I mean, I guess that be the family home, you would have taken a different approach to that in terms
100%.
of what you wanted out of it as opposed to just a hardcore investment.
Yeah, correct.
So the second one you said was in northwest Queensland?
So Redbank Plains, which is West Brisbane, yeah.
Okay. And what did you buy there?
So we bought a 311 on a 450 block, just a real low set brick and tile home, and we paid $277 for that one. So look, a really low entry price, good yielding, when we bought it was at $325 a week. So one of those ones that sort of pays for itself, which was great.
And demand has been good there in terms of rent. So you've had
it has been,
in.
yeah. It has.
Yeah. And when did you buy that?
So we bought that one in 2016.
Okay. What does it look like now? What do you think it's valued at now?
It's probably about 325.
So it's on the right curve.
Yeah.
325. So that sounds like it's a nice performing asset for you. And that was property number 2 in the portfolio.
Correct.
What does number 3 look like?
So number 3, we went up to North Brisbane in Kalanga, which I know is a pretty popular suburb for a lot of people investing it these days. It's a great suburb, again, with the advice from the buyer's agent.
Same buyer's agent?
Correct.
Yeah.
So we paid $340 for that. That was a high set home on a 600 square metre block with the added benefit of, I guess, some room to add a granny flat.
Okay. All right. And what does that look like? Was that also 3 beds?
Yes.
Yep. 340, is it the same? What kind of yields are you getting there? What kind of rental are you getting there?
$340 a week.
$340 a week, and demand is good as well. So it's and it sounds like a good performing asset.
Correct. Yeah, we've had the same tenant since May 2017. Yeah, it's been good.
Yeah, and we'll talk a little bit about tenants as we go forward. Talking about getting help, not only professional help, but the help you get from your tenants, and just in terms of being good tenants, paying, looking after the property,
100%,
doing the right thing. And we'll talk a little bit about how to keep those tenants and how to keep them around. So number 4, what does number 4 look like?
So that's down in Hobart.
Okay.
So the suburb of Glenorchy. So this has been our best performing property.
Okay.
We bought that.
Yeah, I was just going to say Hobart sort of came to the fore. I started doing and hearing it more and more and more coming up sort of beginning this time last year. And it's done well, hasn't it, Hobart?
It has.
As an area. When did you buy?
So we bought in November 17.
Okay. Yeah.
We paid $351 for that one, and it would be worth it fell $440 pretty conservatively.
Yeah.
So it's achieved massive growth, which has allowed us to buy the last property, which has been helpful.
And the one in Hobart, is that done well also with tenants and getting good rental yield?
Yeah, 100%. So when we bought it, it was at $400 a week, and now it's at $450. The same tenants that have been in the property for, I think, over 8 or 10 years apparently.
Oh, wow.
So they're
so that they're not going to
very
want to move.
long-term tenants. Yeah.
And good tenants as well, looking after the place.
100%. They treat it as if it's their own.
As their own, which essentially it is, isn't it? I mean, it's their home, it's your investment, it's your property, but the tenant, for such a long-term tenant, it would be their home.
100%. Yeah. And I guess as landlords, we take that view and we allow them to, within reason, to do what they want with the property because. In fact, I've not seen the property myself, and it's to them it's their home, and we sort of allow them to make it their own. And whether if they're putting something on the walls in terms of picture frames, I don't want to hear about it. That's fine. They can do that. Yeah,
and that's another interesting point as well. We talk about good tenants, but there's also the quid pro quo. The other side of the coin is that good landlords and allowing and I guess that looks like the landlord allowing the tenant to treat the place as their own, as if it was their home, in terms of putting up pictures and things and making, within reason, the changes that make them feel at home.
Yeah, 100%.
And make them feel comfortable.
Yeah, no, spot on.
So that did well, and that freed up some capital, and that gave you some capital growth that allowed you to buy number 5.
Correct.
And what does that one look like?
So it's probably one of our most exciting ones in terms of potential. So we settled that on that one only last month. It's in the suburb of Deception Bay, up North Brisbane again.
Okay.
And we paid $342,000 for that. But this property's in one of those rezoned pockets where it's been rezoned 21 metres high, which gives us some really cool opportunities later down the track to either develop or sell to a developer. There's a few different options that we could go down with this one, which is great.
Just having a look at this as we've spoken now, there's a couple of trends that have come up for me as I'm looking at this, and I'm seeing the sort of the fingerprints of the buyer's agent on this. One is that they're all in a relatively similar price range. They're all in a relatively similar tenant range as well, in terms of they're well tenanted, good tenants. And a couple of them have also got some nice opportunities for development to go in different directions. You mentioned the granny flat area, and this one with the rezoning now. So I don't want to put words in your mouth, but or in the buyer's agent's mouth, but I guess there would be some benefits in terms of getting expert advice and getting the right kind of help from the right kind of people. When you were choosing your buyer's agent, what were the kind of things that you were looking for, and has it come to pass? Have you got those things from the help that you were looking for, just on the buyer's agent side?
We went with the first buyer's agent that we met for a number of reasons. I guess it was an instant connection with the guy. He sort of, he met us, and there was that instant connection, and we knew he was the guy that we could, have that long-term relationship with, and it has worked out well. So yeah, and obviously he's got a great track record himself. So yeah, there were some of the traits that we really liked in him, and decided to give him the go.
Yeah, at Smart Property Investment, we're great fans of getting help. So quite happy to mention who he is. If you want to mention who the buyer's agent is that you work with,
Mr. Glossop.
Okay, Paul Glossop. Yeah, well known to the show, well known to SPI.
Yeah, 100%.
Fantastic. Yeah.
No, he's been great for us.
No, terrific. That's good to hear. From here going forward, I'm assuming that this is not the end of the road, that you've got some plans to move forward. What does the future look like for you and the help that you get with Paul and the portfolio as it goes forward?
Yeah, so I guess at this stage now we'll probably sit on the sidelines for a period of time until we can, I guess, reassess finances and we'd like to see some growth in the property portfolio as well. Then we'll go again, but without a doubt we'll continue adding.
And what yeah. Do you have a final number in mind? What you're looking for, or are we just going to take it as it develops?
Yeah, I'm not one to really be having some sort of definitive number in mind. It's all about just adding great assets to the portfolio, and being confident that they will perform. That's pretty much our approach.
Are there any areas that you are looking at closer than others at this stage, earmarking?
Yeah, so personally I'm going down the path of becoming a buyer's agent as well. So I'm looking at and researching a whole bunch of different areas personally and for potential clients. And Adelaide's an area that I do like and see a lot of value in. And there's the data that's coming out of that area is looking pretty positive.
So that's interesting. And now putting your potential buyer's agent cap on, when you talk about the data that's coming out and the fundamentals that you would look at, when you're assessing an area, what are the things as a buyer's agent you would be looking at? What are the things that sort of stand out for you? Yeah,
things like wanting to see public and private infrastructure spend, jobs growth, which obviously will aid jobs growth. Population growth, looking at seeing where people are moving, which areas people are moving into, because ultimately that will drive demand for rental properties. So there's some of the key areas that I do look at, and as an accountant, I love looking at numbers and graphs, and we dive pretty deep into large sort of data sets that allow us to sort of pinpoint where we should be buying personally, and then for clients as well.
As an accountant with a portfolio of 5 and looking to grow, what kind of things are important to you in terms of keeping the records and making sure that you're on top of the sort of the outgoings and the incomings and trying to pick up problems, financial problems, perhaps before they occur?
Yeah, it's all about keeping some pretty detailed spreadsheets, and I'm a bit of a boffin for spreadsheets, and I sort of keep some pretty elaborate ones that sort of allow you to track a whole bunch of different metrics for the portfolio, and the cash flow situation for it as well. But even taking a step back, it's, I guess, with that experience, it's about getting structuring right at the beginning, and I think that's overlooked a lot. It's looking at who should be buying the property. Is it mum? Is it dad? Is it joint tenants? Should we be looking at trusts? There's a whole bunch of different things that if you look at and assess properly at the beginning of the journey, it can help you later on down the track. It's
a bit like laying the strategy in a bit of a chess game. If you set it out wide enough, and then you give yourself plenty of room to move off. But if you paint yourself into, if you set it too short and too narrow, you paint yourself into a bit of a corner, don't you?
100%.
When it comes time for borrowing and capitalisation.
No, you're right. Yeah, hit the nail on the head. That's it's one of those areas that it's probably the boring part of building a strategy or in a portfolio, but I think it's probably one of the most important, at least at the onset when you're going down that path.
And then you mentioned that some of your spreadsheets, and I must tell you that Paul, that Benjamin's got his spreadsheets here in front of him on the laptop in front of him, on the iPad here in front of him, and working on them as we're doing the show here. But what do they look like? What are some of the metrics that you are most interested in on those spreadsheets of yours?
I put a lot of emphasis on cash flow, so I want to know the family's cash flow, and then how does that impact the property portfolio's cash flow. So all my rates and all my utility bills are sort of mapped out. I know when they're due. And then I do a whole bunch of different stress testing the debt through the portfolio as well. So it's quite a bit of debt in the portfolio, which we're comfortable with, but I also like to stress test it at different interest rates. So if there is a 0.5% interest rate increase or a 1% increase over time, I just like to see what does that mean to my cash flow, whether that means, can I hold that property or whatnot. But we've got a whole bunch of different metrics that we like to look at.
So stress testing would be sort of running what ifs. What if the
Correct,
interest rate does this? What if I lose a tenant? What if I have a catastrophe? Or what if I lose? What if there's some expenses that come through that I'm unplanned for? And then I guess just from a financial prudence point of view, it's important to know how much, what's the right word? How much variance you've got in order to get to sleep well at night.
Yeah, no, 100%. It's this helps me sleep at night, and knowing where everything's at, and also like to track performance as well. And I'm not afraid to, I guess, move a property out of the portfolio if it's not performing. Haven't had to do that just yet, but so the spreadsheet sort of track a whole bunch of those metrics.
And talked about your home that you bought and the mindset that you had around buying that versus the mindset around the investment, and that really talks to what that is, isn't it? Is that these are assets. Your home is your home, and that's a different thing, although it's also an asset. But these are strictly assets. So when you run the numbers, and if something's not performing, you're not emotionally attached to it. It sounds like, and that you're quite happy to move it out of the portfolio and replace it perhaps with something that will work. Yeah,
100%. So the home is obviously, that's a lifestyle decision. But the actual investment portfolio, I've never seen any of them. So all 4 of them were bought sight unseen, and I treat it as if it's a business. So pretty ruthless if I need to.
Yeah, it sounds like, and I mean, this comes up from time to time, this buying sight unseen, and a lot of people might balk at that. They might go, geez, you got to go and get your eyes on the ground and see what you're buying. You haven't done that. How have you been comfortable in the purchase that you've been making? How have you made yourself comfortable not having seen the places?
Yeah, so obviously buying the properties through a buyer's agent, Paul or his team had seen them face to face, so that's where you get the comfort. But as the actual investor, if I wasn't going through a buyer's agent, I'd probably want to be seeing them myself. But I guess if you're going through a professional, then you're relying on them.
And that sort of brings us quite nicely back into the realm of getting help and getting the right help. We've talked a lot about Paul and the buyer's agent and the work that you've done with him and setting up the whole portfolio and where you are right now and where it's going to. What other professionals do you use and have you used, and would you recommend to others in terms of building a good, strong, solid portfolio?
The first one that comes to mind, which has been in the headlines lately, and it's a mortgage broker. Mm-hmm. And I'm a big advocate for them, and I see massive value in what they provide, I guess, in that space. So personally, I have used them in the past and will continue to do that. Conveyance is obviously very important to have a good relationship with a conveyancer when you're going through the transaction. Property manager, crucial in, I guess, giving you that comfort that your assets being managed properly. When you're buying a property, it's the building and pest inspector. That's also very important to have a professional that knows what they're doing and is sort of giving you that comfort that the property is fit for purpose. So they're probably some of the key, I guess, professionals that I have in my team and would recommend people use.
And do you use the same ones throughout the portfolio? Have you got different? I mean, obviously the property managers might be different in the different areas, but in terms of the mortgage broker and the conveyancers.
Yes.
Yeah.
Correct. Yeah.
Same ones. Yeah.
Yes.
Yeah. Certainly, the mortgage brokers have been in the news just recently. I mean, as we're recording this podcast, the final report came out. I think it was yesterday, the day before, and mortgage broking and mortgage brokers and the look of that seems destined to change. Do you think that's going to have an impact on the market and the business of investment going forward, or do you think the market's going to just rise and adapt to some of those changes?
I think it'll adapt, but and I still think people will use the services of a mortgage broker, but it will, if it's a fee-for-service arrangement, then perhaps the sort of market for that service may diminish. It's still a little unknown, I guess, but I think the market in general will still continue to rise and perform well.
Yeah. Hey Ben, we were talking a little bit earlier about tenants and the importance of tenants. Let's just explore that a little bit. What does a good tenant look like to you, and what do you want from your tenants?
Yeah, look, it's one that looks after the property and treats it as if it's their own, and 2, it pays the rent in a timely manner. I guess that's probably the 2 key traits that I'd be looking for in a tenant. And look, it's they're probably the key too.
It's pretty straightforward.
Yeah.
How much tolerance do you have around that? If a tenant falls on hard times and doesn't make their payment on time, are you ruthless around that, or is there a level of tolerance that you have?
No, pretty understanding, to be honest. Actually had a situation over Christmas where one of the tenants lost his job, so it was a bit down on the luck, and we sort of just gave them grace, and they fixed it up in January, and it was fine. So it was just sort of that period where it was out of work. So look, you need to cut people some slack, and these things do pop up. But I wouldn't say I'm ruthless.
Yeah, that's probably a good position to take, isn't it? Because as you said earlier, these are the people's homes, and people can, we can all fall on hard times sometimes. Things happen, unexpected events. So good to hear that. Hey Ben, it's been a real pleasure having you on the show today. Thanks for taking the time to come in and have a chat to us about your portfolio. Looks terrific. Good to get you back in a couple of months' time, have a chat and see how things have developed on these numbers, and also what's next and how the portfolio has grown.
Yeah, great. Thanks, Tim.
Fantastic. Remember to follow us on all the social media stuff, Twitter, Facebook, LinkedIn. If you have enjoyed today's show, please leave us a 5-star review on iTunes. It is the very best way for listeners to find us and for them to hear the great content that we are putting out here. As always, smartpropertyinvestment.com.au is where you'll find us. There are plenty of stories there on the machinations of property investment to be found across the whole of Australia, including those on my guest, Benjamin Plohl. Thanks again for tuning in, and we'll see you next week. Goodbye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.